Good afternoon and thanks for joining us. Holly Shields here live from Kalkine Studios in Sydney, and you're watching at the early trades. The Australian share market has opened on a weak note today, even after two consecutive sessions of falls, taking negative cues from Wall Street indices that have ended near the lowest levels of the day. However, robust commodity prices have uplifted sentiments in the materials sector. The ASX-200 was trading at 0.13% or 9.3 points down in the first few minutes of the trades on the back of global stock markets which closed lower yesterday, as a rising crude oil price keeps the inflation concerns alive. Although bond yields have eased a bit after having touched a new multi-year high this week, and 1 hour past opening, the ASX was trading 0.14% or 10.6 points lower, while the ASX All Ordinaries Index was down 0.12 or 9.1 points. Meanwhile, the AVIX shot up by 3.66%, and on the sectoral front, 8 of 11 sectors were trading lower today. Telecoms, A-REITs and financials were all taking a hit of over 1% each, as materials led with a 1.5% gain, followed by 0.98% upticks in the utilities space. Now for a look at the ASX players making headlines. And it's goodbye Afterpay, hello Block. That's right, shares in Block, the payments giant founded by Jack Dorsey, was previously known as Square, has now been listed on the ASX with a price of $176, following the $39 billion deal with Afterpay struck last year. The share price debut reflected a mild fall from the $177 the shares closed at on the New York Stock Exchange on Wednesday's trade. Afterpay founders Anthony Eisen and Nick Moynar have done an extraordinary job taking up this startup from a valuation of 0 to $39 billion within just 6 years. The listing of Block on the ASX today is giving those who've long doubted Afterpay's valuation the chance for a victory lap. Although it's not all sunny skies, as Block's share price has tumbled a staggering 54% since it peaked a few days ago, after the Afterpay deal was announced. Meanwhile, another ASX-listed BNPL player, Zipco, has shared its second quarter results for the period ending December 31 today. The company revealed that despite challenging situations, they've delivered another robust set of numbers with growth driven by customer and merchant acquisition, along with the increasing levels of engagement. Quarterly revenue is up 58% year over year, while quarterly transaction volume is up 53% year over year. And then in other news, Australia's leading petroleum exploration and production company, Woodside Petroleum, has struck a flexible long-term deal to acquire LNG from a US Gulf Coast LNG export project. The heads of agreement signed with Commonwealth LNG, including buying 2 million tonnes of LNG per year from Commonwealth's proposed export terminal in Cameroon over 20 years. Purchases are scheduled to commence in the June quarter of 2026. And also in the news is Westpac, who's brought forward expectations for the first interest rate rise to August of 2022, when it predicts that the Reserve Bank will raise rates to 0.25% from 0.1%. The RBA will move a second time in October to 0.5%, and this timetable is later than the market, which is primed for a June increase. But that being said, Westpac has brought forward its timing from a previous forecast February of 2023. The bank's forecasts are more aggressive than the RBA's, particularly on underlying inflation, which will be at 2.9% in June, or 3 consecutive quarters within the target band by then. Well, it is reporting season and earnings announcements are pouring in. I have more updates from the biggest companies in Australia, so stay tuned after this break.
Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the Crypto Buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV.
Welcome back to the early trades here on Kalkine TV. Santos on Thursday announced a record annual production and sales revenue in 2021, powered by a surging commodity price. The ASX-listed oil and gas player reported annual production of 92 million barrels of oil equivalent, inclusive of 1.7 million barrels of oil search assets from the 11th of December. And likewise, the company reported quarterly sales revenue up 34% and record annual sales revenue up 39%. And then online fund management platform NetWealth has bolstered funds under administration to $56 billion in the December quarter, following net inflows of up to 41% from the same period a year ago. The company's funds under management also rose with a net new assets of $800 million for the quarter, bringing the total sales of assets under management to $13.8 billion. And this might come as little surprise to many, but passenger traffic at Sydney Airport was lower than anticipated in December, due to, of course, a rapid spread of the Omicron variant, leading to reduced demand, cancellations, and lower loads. Total passenger traffic in December was down 69% on the corresponding period in 2019. Whereas domestic passenger traffic was down as well, 59% on the same period for 2019, while international passengers passed through the airport in December. That was down as well, 84.5% from the corresponding period in 2019. And finally, one miner is going for gold this year. Northern Star Resources has delivered $950 million in December quarter sales revenue, and they're on track to reach their gold production guidance levels. The company said they forecast 1.55 to 1.56 million ounces of gold with an average price of $1,400 to $1,500 per ounce remains unchanged. Well, that is all for now on the early trades, but stay tuned for more only on Kalkine TV. Holly Shields here, signing off.